signals from the United States Fed, Wall Street is on a track to close the week in the green. Investors seem to believe in the bull market and are ready to fix profits. The New York session today might confirm the beginning of a new rally. The benchmark stock indexes closed yesterday at almost one-year highs. The market is driven by optimism in the high-tech sector. The Dow Jones climbed by 1.26% to close at 34,408 points. The Nasdaq added 1.15%, suggesting a weekly gain of nearly 4%. The S&P 500 rose by 1.22% to close at 4,425 points. The major stock indexes traded with the same optimism in the pre-market. The S&P 500 is expected to trade in the intraday corridor between 4,410 and 4,500. The S&P 500 and the Nasdaq grew on a Thursday and closed at the highest levels in the last 14 months. Investors were pleased about macroeconomic data, which cemented the hope that the Federal Reserve approached the end of its aggressive tightening cycle. Though Jerome Powell and the rate-setting committee tried to assure the market of the opposite. Yields of U.S. Treasuries declined after a series of economic data proved easing inflationary pressure. For example, U.S. retail sales unexpectedly jumped in May because consumers were poised to spend money, in particular on cars. Besides, the U.S. Labor Department reported that initial unemployment claims did not change last week and came in at 262,000 but surpassed the forecast of 249,000. Moreover, import prices sank in May with the sharpest annual decline in 3 years. Previously, on Tuesday, the market found out that headline inflation accelerated slower than expected. So the stock market has been trading higher because of a softer than expected inflation data and other economic data released after the Fed meeting. Yields of U.S. Treasuries are going down because investors are not betting on a further hawkish Fed's moves. According to the FedWatch tool, traders foresee a 67% chance of a 25 basis point rate hike in July, followed by a potential rate cut by December. U.S. Treasury yields declined, pushing up sensitive stocks. Against this backdrop, Thursday's gains were broad and included sectors that were considered sensitive to fluctuations in the state of the economy. All 11 S&P 500 industry sectors rose, led by healthcare at 1.55%, followed by a 1.54% rise in telecom services. Apple shares rose by 1.1% and Microsoft shares grew by 3.2%, breaking the previous closing record in November 2021. Kohl's shares increased by 2.7% after being upgraded. US-listed shares of Chinese companies Alibaba Group and the JD.com grew by more than 3% each after the People's Bank of China lowered the borrowing cost for its medium-term loans for the first time in 10 months. So far, the S&P 500 is up about 15% and the Nasdaq has gained about 32% for the year. Already on a Friday, futures for U.S. stock indexes continued to grow, while central banks are still worried about inflation. The market seemed to neglect worrisome signals. The S&P 500 went into a bull market last week, having printed a 20% gain. The index is determined to continue its trajectory, at least until it touches the landmark of 4,500 points. The rally came despite Fed Chief Jerome Powell saying on Wednesday that the labor market and economic growth are holding up better than expected, and this will likely prolong the central bank's fight against inflation. Instead of listening to the signal, markets focus on the growth narrative and seem to downplay hawkish forecasts. Stock investors are betting on high-tech giants, which in turn are also rallying to lead the way in advancing artificial intelligence technology. Microsoft shares climbed by 0.3% in a pre-market trading a day after its shares closed at a record high, and the company hit a record market value of $2.59 trillion. Shares of a chip maker Nvidia rose by 1.4% after hitting new highs on Thursday. Shares of Adobe jumped by 3.4% as earnings forecast for Photoshop maker beat analysts' estimates as the efforts to boost demand through generative AI integration pay off. Thanks to this high-tech hype, the major stock indexes are on track for strong weekly performance. Rising mega-cap stocks have seen the high-tech Nasdaq poised for an 8-week straight profit. In the currency market, the US dollar index is discouraged by optimism on Wall Street. The US currency has weakened considerably this week, despite a 0.1% intraday uptick to 102.2. The US dollar is overwhelmed by the doom and gloom. The instrument is likely to trade in the intraday corridor between 101.70 and 102.5. A busy week for central banks was closed today by the Bank of Japan, which maintained its target short-term interest rate at minus 0.10% and a zero cap on 10-year bond yields. After this decision, the yen fell significantly by 0.5% against the US dollar to 141 yen. The euro was poised for its best week in 7 months after the ECB raised borrowing cost to 22-year high and hinted at further rate hikes. Weak US economic data prossed the US dollar, so the euro rose to 1.0947 after hitting a 1-month high, rising more than 1% on Thursday. The ECB's policy decision came a day after the US Federal Reserve left interest rates unchanged. A series of data on Thursday caused markets to question the regulator's hawkish statements about future policy. Investors remain more convinced of the hawkish policy outlook in Europe than in the United States, and this is putting a lot of pressure on the dollar, which has every chance of ending the week at a 1-month low. Meanwhile, the Canadian dollar has bright prospects. It's the main beneficiary of the US dollar's weakness. Having slipped by 0.06%, the USD CAD pays trading at 1.3210, and the intraday corridor is seen between 1.3190 and 1.3270. The loonie was able to assert strength yesterday on the back of the US dollar's plunge and an impressive rally in oil prices. Crude oil appreciated roughly by 3% in light of the news that output rates at the Chinese factories expanded in May to the second largest value in the world history of such surveys. While demand from China is growing, the voluntary cut in oil production introduced in May, as well as additional cuts by Saudi Arabia in July, will limit supply. At the same time, already on Friday, both benchmark rates pulled back a little from the highs. Brent crude traded at $75.52 a barrel, down 0.17%, while WTI fell to $70.41. Despite cautions, market sentiment, both oil benchmarks are poised to show some weekly gains after 2 weeks of a losing streak. As for the crypto market, it has failed to regain its footing so far. Digital assets are trying to catch fragile opportunities to grow, but fresh news sprang unpleasant surprises. Bitcoin is also unable to recover. The token traded higher than $25,500 in midday, but shed 0.14% in the early American session to trade at 25,530. Popular altcoins are trading mainly lower in a parallel. Litecoin is the only one to rebound. The cryptocurrency market is now watching the blockbuster starring Binance. The exchange said on a Friday it was leaving the Dutch market as it failed to meet registration requirements to operate as a digital asset service provider. A spokesperson for Binance said the company has explored many alternative paths to meet registration requirements in the Netherlands. The company said that from July 17, trading in the Netherlands would be stopped and existing Dutch users will only be able to withdraw assets from its platform. In addition, the US branch of the crypto giant announced massive layoffs as the regulators accused it last week of violating securities laws and attempted to freeze its assets. Against this background, the share of Bitcoins in the total capitalization of the crypto market is close to reaching a two-year high. As of Friday, Bitcoin dominance was 47.8%, just below the July 2021 short-term peak of 48.2%. Speaking of Bitcoin intraday outlook, the crypto has clearly extended its range to $24,800 and $26,000. The asset is consolidating at $25,500 and could spend the day in the tighter $25,200 and $25,800 range. Going beyond the range would send Bitcoin to retest over $24,750 or $26,100. That's all for today. We keep monitoring the financial market situation and wish you a successful trading day and profitable trading. Subscribe to our channel and see you on Monday.